At Market Foolery is our Twitter handle. You can hit us up with questions there. I got a question from StuCat31 who asked, do you think dividend stocks for a young investor is wise? None of us are young investors, but the question
why you got to go there?
I'm just saying.
Is it because we're on video today and we can't hide the fact? Whereas normally, the listeners could entertain the notion that
we need stunt doubles.
Do you think that's happening? Do you think there are listeners who have heard this podcast over the past few years and thought, oh, yeah, those three guys, they're easily in their 20s?
Hope so.
Yeah, yes, the answer is yes.
No.
The question remains.
The mysteries are gone now.
Yeah, exactly.
But not that we're advocating anybody watch the video.
No. But if you are in your 20s or 30s, does that make sense?
I'll be honest, I don't really care about dividends. There's actually...
And you've been investing since your 20s, so I'm assuming like when you were in your 20s, you were like, no. But even now...
there is a theory, and we're going to start talking financial theory, so this is fantastic for a podcast.
Honey, come quick.
Yeah, run on in. The dividend irrelevance theory, which is really what I want from a business, is that they do good things with their capital. And if they don't have good things to do with their capital, returning it to shareholders through buybacks or through dividends is perfectly legitimate. But whether a company pays a dividend or not, for me, is largely not that relevant. I think it becomes relevant for people as they grow older and would like a stream of cash coming back to them in a fairly tax efficient way, but by good companies. Whether they pay dividends or not doesn't matter all that much.
Well, I think that young investors should not exclude dividend paying stocks because there are many great ones, and it is sort of part of a complete, portfolio to have companies that are not all taking all of their money and investing it in growth. If you do that, if that's your entire portfolio, I hope you're young, because
you're going to visit some places.
Yeah, there are some times when that's going to go wrong, but that is how many young people might think they are supposed to invest is, buy some explosive growth things, because if they explode, then you've got 30, 40, 50 years left to make the money back, which is true, and it is a reason to take on more risk when you're young. But a lot of the great companies out there have been around for 40, 50, 80, 100 years and don't need to take all of their profits and constantly try to grow the business at explosive rates. And so paying a dividend imposes a certain amount of discipline, and it relieves management of some of the pressure of constantly looking for ways to keep the growth machine going. And so if you're only left over, if say you're paying out, you've got a payout ratio of, I don't know, pick a number, 40%. So you're paying out 40% of your profits every year to shareholders. You've only got to figure out what to do with the other 60%. That's easier on management than taking 100% of the profits every year and saying, how do we keep this high growth equation going? Yep. So there are a lot of great companies that pay dividends, and absolutely young investors should be looking for not just big risky bets, but great companies of all stripes.
But I think that's one of the things that's changed over the last 15 years or so is the perception of dividend stock. I just remember when I first started investing and I was in my 20s.
So you've changed in 15 years.
Yes.
The perception.
No, I think the perception of dividend stocks was big, stodgy, unimaginative, and almost completely lacking in growth. Yeah. And we've seen plenty of examples over the last decade of companies that are able to establish healthy growth patterns, have market-beating returns, and oh, by the way, they also pay a dividend.
Yeah, that's Costco. I mean, what you've described is Costco, and I remember suggesting, I guess 15 years ago now, that Costco was one of the most innovative companies in America, and like they have, they're not a .com. They're not doing really cool things. They're not from Northern California. How could they possibly be innovative? And I do actually, to Bill's point, I do think that having a dividend and having a statutory dividend does give companies some discipline. And if you were to ask me if I wanted a slate of dividend-paying stocks versus a slate of mega high growth stocks, I'd take the dividend stocks every time. Every time.
Yeah, the best stock over the last, it's either 40 or 50 years. I don't think it actually matters pretty much what time period you're talking about, is Philip Morris. And that has been paying dividends all the way. I mean, that equation assumes you took the dividends and reinvested it in the stock, et cetera, et cetera. But, you know, the many of the great growth stocks over the last 40 or 50 years have paid dividends all the way. And then you need to reinvest the dividends for the maximum, return on that kind of an investment.